and therefore the amendments are being brought in. And also, in doing so, and in passing its verdict based on invoking the Swiss ribbons matter, the Supreme Court also said that we need to move away from traditional approach in finding solutions for corporate, commercial and economic matters. And that is why this code on its own is one of the very effective tools, but periodically we are coming out with quite a few out-of-the-box solutions, but of course remaining consistent with the Constitution. So the economic laws, the Supreme Court felt at the same time, felt economic laws need to have flexibility and also should do some experimentation. The Supreme Court had said that experimentation is sort of something acceptable when you're looking at a situation of reforming the economic laws. So the main purpose is something which I've clearly stated. I would want to just go into the salient features of all the amendments that we are planning this time round. So there are, as I said, 7 sections which are being touched upon for the amendment, and I'll just highlight the larger context. They are largely explanatory changes, trying to bring in clarity to the existing positions. So clarity is being brought on allowing comprehensive corporate restructuring schemes such as mergers, demergers, amalgamations, etc., as a part of the resolution plan. That's the first one. If the honourable members have got the amendment bill as passed by the Rajya Sabha, you will see that that's the first one which I'm referring to. Section 5 now will have mergers, amalgamations and demergers also included into the description of what can come as a resolution plan. So the next one is greater emphasis is being laid on the need for a time-bound disposal and at the application stage itself. So we are looking at application stage being a very critical component. So if there is a delay, the usual process is 14 days, by which time it should be admitted. But if it is not admitted even by the 14th day, we are requesting through this greater emphasis that we are putting now, that explanation be given as to why it is not getting admitted. So at this stage, without going further into greater details of the various amendments, sorry?
Okay, hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is the show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our experts then. Avinash Gorakhshekar of Joindre Capital and Dharmesh Kant of India Nivesh Security join me on the show. Many thanks to both of my guests for joining me. Today on Hot Money, we'll discuss the two-wheeler space, what exactly is happening there. All the three major two-wheeler companies have come out with numbers. We'll decide what exactly is the priority and the pecking order there. We talk about UPL and the numbers that have come out. We analyze UPL's numbers. We analyze Ashok Leyland's numbers also that came out. Ashok Leyland probably surprised the street on the higher side. And we ask our guest which is one stock that they believe is worth accumulating at this point of time. So that's something that we will speak about. But before we start with the discussion on the so the first thing that we want to talk about is the two-wheeler space and how most of the two-wheeler companies that have come out with the numbers have actually disappointed. Eicher saw a series of downgrades that came out and that's something. So before we go on to analysis with the two-wheeler earnings, we have Yatin Mota to tell us more about the auto slowdown and the impact of two-wheelers, and then we'll analyze it. Yatin, what's the scene with the two-wheelers this time?
Well, Darshan, if you look at the Bajaj Auto, Hero MotoCorp, Eicher Motors, the Royal Enfield bit, all of them clearly negatively surprised to the consensus earnings. Margins were below estimates. More importantly, in the first quarter, we saw volume decline for all of the two-wheeler players, probably ex-Bajaj. Because of which the margins were quite lower. In fact, if you look at Royal Enfield in the two-wheeler segment, saw the highest amount of margin decline on a year-on-year basis vis-a-vis the other players. Of course, all of them saw a decline in margins on a year-on-year basis, but the steepness of the margin decline was the highest in Royal Enfield. As far as Bajaj Auto is concerned, given the fact that they held on to the overall volumes, which were flattish in nature year on year in the first quarter, they were able to garner market share in the first quarter. So on an overall basis, weak operating performance, market share gains for Bajaj Auto, and clearly for Royal Enfield, there is no light at the end of the tunnel. Probably one will have to wait before there could be some recovery in the volumes for the festive season.
Okay, many thanks for that, Yatin. Dharmesh, Enfield really did manage to disappoint with the margins. It's almost at a 3-year low. How did you rate the earnings season for the two-wheelers this time?
See, the earnings were expected because the monthly numbers were already out. So, no disappointment out there as far as earnings are concerned. Even Hero MotoCorp, if you strip up the one-off, the numbers were pretty much in line. But the point is, the slowdown is there to stay. It's not going to come up in a hurry. And the transition to EVs will be a big challenge for all the two-wheeler makers. So, whoever gets first, we don't know as of now. And with EPS contraction, the valuation still will be higher side. So most of the analysts are building in a higher EPS expansion. That is the reason why we are getting 10 times, 12 times kind of a forward multiple. But my own sense is this will drop eventually when the earnings come out for FY20. So it will still be at 15 times Hero MotoCorp.
Okay.
So this suggestion is here to stay, and the transition will be tough for these guys to tackle. So I don't think serious investment bets can be played on two-wheelers as a whole basket. One can still have a trading play in these stocks, and for trading plays the market has to stabilize first. And there I think Hero MotoCorp still stands the best chance.
So if someone wants to make an investment in two-wheelers, let's say a staggered investment, you still believe that Hero Moto is the best suited among the four?
Yeah, because the type of capex they have planned, especially for the electric vehicle. So I think they have moved ahead of the curve compared to say a Bajaj Auto. So who is still at sea and figuring out how to come out with electric variant. So I think going forward, if this happens, if the government is firm on rolling out maybe for the tier 1 cities first, so they will have the advantage of both IC engines as well as electric vehicle engines. So Hero MotoCorp stands the first mover advantage. So that's the best bet to
Okay, Hero MotoCorp. What's your sense of the auto earnings, at least the two-wheeler side, and what's the pecking order?
No, I think Darshan, clearly volume growth has disappointed, and I think you could possibly see this disappointing actually getting spilled over the second and the third quarter. I don't think you're going to see a recovery immediately, and overall I think within the pecking order, I think Hero MotoCorp and Bajaj Auto, I think these are two bets which on declines one could definitely look at investing. But from a longer term horizon, I think in the near term, in the next 6 months, I would not be surprised that there could be continued underperformance. So our sense is that somebody who's looking at a momentum kind of play could possibly avoid this sector, but from a longer term point of view, maybe a 5 or 8% correction on Hero MotoCorp or maybe Bajaj Auto could be good entry points, provided one is willing to give in at least 12 to 18 months.
Okay, that's the view that's coming in. I think the weakness will continue on the two-wheeler space. That's something that our guests are speaking about this point of time. Hero MotoCorp somehow seems to be the top pick, but buy on declines kind of strategy is something that we want to talk about. Before we get to analyze UPL's earnings with our guest, let's get in Yash Upadhyay, who gives us okay, Yash is not there right now, but we'll talk about UPL's earnings that actually impacted. The numbers were pretty weak, India as well as the European markets were weak for them. Everything coming in below estimates. Avinash, what did you make of UPL's earnings? Were you disappointed?
No, I think on the operating side, Darshan, the numbers were consolidated for the first time with Arista, so numbers were not exactly comparable. But I think on the interest cost side and on the Indian markets as well as on the European side, I think there was definitely some weakness. The management commentary, however, continued to be quite positive. In fact, the management has reiterated that they could be gunning for a 8 to 10% volume growth and a 16-20% EBITDA growth. Most importantly, debt repayment seems to be on the cards. But I think at least for the next 1 or 2 quarters. I would not be surprised that this consolidation will take a little more time for the entire business to digest this acquisition, which is fairly large, and one could possibly see earnings growth missing at least for a couple of quarters. So I think it's better to wait till this Arista acquisition actually properly consolidates and gets digested. But till that time, maybe you could see underperformance continue.
Okay, do you think that the Arista acquisition, they will be able to manage the synergies that they've been saying? Because I think debt was a concern, and then they suddenly took this $100 million, £100 million, I'm not sure, working capital loan.
Yeah.
So that's something that the street was concerned. You think that they will be able to turn this around?
I think, as far as the product mix is concerned, they definitely have a complementary product mix. So I would believe that, Darshan, this would definitely help them in the longer term. But in the near term, there could be challenges. As you rightly mentioned, the debt burden is going to be extremely, important. And since the debt is spread over almost 4 to 5 different currencies, the currency impact is now also going to be very critical for the earnings. So I would believe that interest cost element is going to suppress earnings, at least in the near term. Longer term, I would believe that yes, they have a fairly strong portfolio in Arista, but in the short term, this pressure on earnings from the increased debt burden could possibly put a pressure on the earnings growth.
Okay, that's the view that's coming in. Dharmesh does not track UPL, so we'll move on to the next stock, and that is Ashok Leyland. That came out with numbers, and that also pretty much, let's see what the stock is doing. It did well than what the street was anticipating. So it was up almost 5% in the morning. Again, because of the weakness in the market, it has actually managed to cool off. So that's the trend on Ashok Leyland. I'll come to you, Dharmesh. What did you make of the numbers?
See, numbers were pretty weak. The only silver lining was that market share gain was there in Ashok Leyland. So, in a compressing market, they have been able to garner share from their competitors. But I don't think that should be the criteria for getting an investment bet on Ashok Leyland, because MSCV, segment is here for a downturn. So that will be here. The only, expectation is if government comes out with a scrapping policy of motor vehicles, so 10 or 15-year-old, if MSCV vehicle is there, which is the highest polluting vehicle on the road anyways. So if that comes their way, then it can, give a kickstart to the sales numbers. Otherwise, even there, the EV transition is again a problem being posed by them. So I think too much to tackle as of now. Demand is not there. There is a consumption slowdown everywhere, and then it has the hit has to be taken. LCV was the area which was doing pretty well, and Ashok Leyland has not been too great on that front. So my own sense is, though valuation wise it may look very cheap. I mean 10-12 times again P multiple, which is trading at on a TTM basis, but pain is here to stay. So sustainable, meaningful profits if you invest now for next 1 year looks very unlikely.
Okay, what's your sense on Ashok Leyland?
I think, Darshan, as Dharmesh said, I think the FY20 year is going to be a very turbulent and a troublesome year. I don't think you're going to see an immediate recovery in terms of volume growth. And I think looking at the fact that the scrappage policy has been spoken for a long time, I would not be surprised that this could only be a momentary kind of positive sentiment, if it does come in. But otherwise, on a core business basis, I think it's going to be extremely tough. I would believe that we could see lower levels here. Our sense is that it's better to wait rather than immediately buying the stock, because clearly earnings growth and obviously volume growth is missing, and that's going to actually create a big pain on the operating margins in the coming quarters.
Okay, that's the view. I think auto as a pack is looking extremely weak. And finally, one stock we want to ask a guest should be accumulated, not go in all out, but on a staggered manner, an SIP on one of the stocks that should be taken at this point of time for at least a 1 year horizon. Avinash, very few ideas. I think people must be scared of putting money, but there has to be a start somewhere. One stock you believe that buy now, even if the stock can still fall 10%, yeah, buy later. So on a staggered basis, SIP type investment, which stock do you recommend?
No, I think we are positive on the cement space, Darshan, and I think within the cement pack, the frontline players like ACC, we continue to be quite confident and positive on the cement story as a whole. Although volume growth in this quarter was not there, but this was evident with most of the other companies. But I think what was reassuring in ACC was margin expansion came in after a very long time. EBITDA per ton was definitely much better, and I think the company is making conscious efforts to increase their capacity from 34 million tons to 39 million tons over the next 18 months. So our sense is that you could possibly see a decent volume growth considering that government is pushing infrastructure in a big way. So this could be a good bet, not maybe at one point of time, maybe staggered way, but definitely the downside seems to be protected. And I would believe that pricing gains which have come in this quarter could comfortably stay now at these levels, at least in the coming quarters.
Okay, as a cement, as a pack, you are bullish on only ACC because of certain things?
I think on one or two other companies where we have been positive is Ramco Cement. We believe that Ramco is also one of those companies where possibly on declines we have been recommending the company. Our sense is that it's going to be a stock specific approach across the board. Maybe we may not find companies grabbing market share and improving margins, but selectively I think ACC, Ramco Cements could possibly be decent bets in these kind of markets.
Okay, and Dharmesh, why Canara Bank?
See, my own sense is that PSU banks will benefit for two reasons. One is that NBFC thing which has happened. Second is after the gross NPAs are below 10% kind of a level, they have an elbow room to lend. They are sitting on a pretty huge, deposit base. Like last 5 years, 11 lakh crores of deposit is sitting in all the PSU banks, which they are unable to lend because of some regulatory frameworks. And the second is the apprehension between most of the, bankers not to lend. So I think all these will now play out in their favor. And if you look at the trajectory of, private banks when they were reporting earnings, there was slowdown in the growth. And there was an increase in the NPA. So last 5 years, PSU banks have not been lending at all.
Okay.
They have been very conservative. So whatever incremental lending they have done, they are prudent lending. Whereas private banks, they have been aggressive. And in this aggression, the chances of getting NPAs more is very high with them. So I think there will be a shift in portfolio allocation from private to public sector banks. And Canara Bank stands out because the numbers were pretty good. So even this quarter, the asset quality has improved, slippages was low, earnings growth is picking up, PAT is picking up. So if you normalize things, then the price target is a multi-bagger to me in next 2 years time frame. And they will be raising equity, 6,000 odd crores through the fresh equity, 1,400 odd crores if they sell that Canfin Homes, if that goes through, plus government equity allocation. So I think it's our time. When
Are you bullish on all PSU banks or only Canara Bank, or you think that PSU bank as a theme would do well?
PSU bank as a theme will work from here.
So why not SBI?
So SBI is there, but I think the
Delta will be more
in Canara Bank, yes.
Okay, that's the view that's coming in from Dharmesh. So Canara Bank is something that Dharmesh is speaking on. Avinash spoke about the cement pack. Ramco Cements, ACC Cements is something that he likes at this point of time. But with that, it's a wrap on this edition of Hot Money. Many thanks for my guest Dharmesh as well as Avinash for coming in today. Ask BQ comes up next. Stay tuned to Bloomberg Quint.